Tesla's shares have shot up more than 5% today after the smallest US car maker reported deliveries that exceeded analyst estimates. Tesla's market value is now $2.7 billion more than Ford Motor Company's. Bloomberg's Detroit bureau chief David Welch joins us now with more, and perhaps it's easiest just to show people in our Bloomberg the difference, because we have Tesla's market cap, Ford market cap in blue and GM's in yellow, and you can see the Tesla's is just shooting up there and it has now overtaken Ford's, on its way to overtaking GM. How is this possible, David?
Well, you've got diverging fortunes here. Tesla over the weekend said their sales were 25,000 in the quarter, which is a few hundred more than they said, but any kind of good news on Tesla tends to send its shareholders into rapture, particularly those who are bullish in the stock. They see it as confirming that the brand is still strong, and as they're waiting for the cheaper Model 3 to come out later in the year, if they can keep boosting sales for the older models, that's good news for Tesla. On the other side, you've got the Detroit automakers and really all of the established automakers. We're showing a month of March sales that were a little softer than analysts thought, actually in some cases a lot softer. It's about on par with last year, but that really says we're at peak auto. We're not going to see a lot of growth. There are more incentives out there being spent on to keep the sales going. Inventories are rising. It's not a bad market, but it's sort of headed south, and Tesla's got growth still.
Right. I want to speak more about the Detroit automakers and indeed the global automakers, but just one more question on Tesla first. Does the fact that it exceeded, forecasts for deliveries, does that mean it can continue to do that, or is this one outstanding quarter?
They've generally been growing sales pretty well at Tesla, and there's a lot of enthusiasm for the brand. You have to remember, too, it's really different than the mass market of automobiles that everybody else is selling into, because these are very expensive luxury cars, and they're doing quite well there, and they've been taking some buyers away from the likes of Porsche and BMW, and they continue to do that. So it's not huge growth for them, but it seems pretty sustainable and pretty stable growth.
Let's talk about some of the Detroit automakers then, because wow, did we get numbers we were not anticipating. Why the disappointments? And some were positive, but not as positive as analysts were looking for.
If you dig into the numbers, retail sales are actually up more than overall sales. And you have players like Ford that pulled way back on selling fleet vehicles to rental car agencies and that sort of thing. So that explains it in part. But the reason the stocks are still down, even though retail is up, is you did have pretty healthy incentive spending in the month. And by healthy, I mean more. And that's been consistent the past few months. And you also have inventories that have been creeping up. And the general consensus here is that you're going to see automakers pulling back on production even more, and that always eats into profits. The good news is they're still selling SUVs and pickup trucks. That stuff makes a lot of money. So the production cuts you'll see are in passenger cars that don't make as much money, but the market is sort of saying, okay, this is probably as good as it's going to get. I'm going to put my money someplace else.
Right, and we are still looking for 17.3 million total vehicle sales at an annual rate when we get the final number later, and 13.6 domestically. So, I mean, all told, they're not bad figures if we manage to maybe even fall short of those, but not by much.
Right. This is a healthy, strong market where people can make a lot of money, and GM is still saying that they're going to make more money this year than they did last year because of cost cuts and because they're selling more expensive vehicles and because China does well. Ford's pulled back a bit, but none of this is a disaster. These companies are all making good money, bringing in good cash flow, and they'll just kind of keep chugging along and selling sport utility vehicles as long as the American public wants them.